Hello traders, it's Samurai Trader here. Welcome to session 95, how to day trade any market, the $1,000 a day challenge. For the young guns watching this video, $1,000 a day may not be enough for you. That is where you can always increase your position size, but at the same time we always strictly adhere to our money management rules. What I teach in these sessions you can apply to the futures markets, any futures contracts, to Forex, and of course to stocks. There is a risk in trading. Most of you are aware of that, but by law I do need to just flash up the disclaimer. Bottom line is, don't trade with money that you can't afford to lose. And very quickly, just a very quick advertisement: if you haven't already downloaded my ebook, the free day trading ebook, The Truth About Day Trading, please click on the link below. As always traders, my videos are raw, real, and unedited. I just thought I'd mention that. Make sure you subscribe to my channel also below, so you can be kept up to date with all of my latest videos. I bring out a number of videos every week. And just a very quick advertisement, as I mentioned, you can join my program, get all of my indicators, all of the PowerPoints, all of my resources, over 200 hours of recordings, all for only $197. So you can visit my website or go to the link below. And last of all, I have a bonus going at the moment where you can also attend 8 of my live coaching sessions. So every Tuesday and Wednesday evening, 6 p.m. to 8 p.m. I run 2-hour coaching sessions for traders around the globe. If you're unable to attend the sessions personally, they are recorded, so you can watch at any time. So let's now get into this. Now, in today's session, I'm going to be walking you through, I think it was 8 trades I took in this particular trading session for 6 wins, 1 break even, and 1 loss. I'll show you part of a recording just because it'll go for too long otherwise. And by the way, I try to keep these recordings short, but they always go for 30 to 40 minutes. It's very hard to walk you through trades step by step without taking some time to do that. And this is where it's absolutely critical, traders, that you remember this, is winning traders are willing to do the things that losing traders won't do. If you want to be a winning trader, you've got to be patient, you've got to be focused, you've got to apply discipline. Just so important. So I'm going to share with you some winning strategies today. Now, I just wanted to bring this up. And so relax, you don't have to learn all of these, but I teach members a whole range of different trend following strategies. Now you may be wondering, I only need one. Yes, you can get away with one, absolutely. But there are different strategies where you have different pullbacks, deeper pullbacks. Some are in very fast markets, like the T25 is the old floor trader strategy. If you trade Renkos or Renko tails, you can do very well trading Renkos. There's a whole range of different strategies, but the reason I bring this up is that I trade both with trend, counter trend trade, and reversal strategy. So in my sessions you might see me trade a range of different strategies. However, initially when you first get underway, you want to limit the number of setups, and I guide you anyway in the training where you should start, because you've got to remember what we call the Goldilocks rule. And I know many of you have seen this before, but not too hard, not too easy, just right. And so you want to start trading with the trend. The other thing I want to really slap down straight away is the false promises that are sold to day traders about earning $500,000 a day per contract, particularly early in your career. Is it possible? Absolutely, that is possible. However, it's not reasonable for a new trader. In fact, you've got to start on the simulator and start from there. And I teach members to start targeting $100 a day per contract. Now, this is where you'll see when I get to the charts and even the video that of my trading, how realistic $100 a day is if you're trend trading. You basically, I'm not going to say it's guaranteed. I can't guarantee that. I can't guarantee you're going to follow the rules, but I think you'll see when we get to the charts how realistic this is. Now if you then trade 10 lots or 10 contracts, That's $5,000 a week. That's a life changer for most people. So break it down, start with a realistic target. Now you'll usually see I'm targeting between $200 and $300 a contract per day. Now I trade generally the Globex session, that is the after hours market. Why? Because that suits me. I've moved back from the States, I'm down under at the moment, and so I like to trade during my day. And so the Globex market opens up from 6 p.m. Eastern, excuse me, 6 p.m. Eastern Standard Time, and there's some great trading. I love the session from about 1 a.m. Central Standard Time through to about 3. In fact, I think it's about the time frame of today's session. But I also love the afternoon session, the New York afternoon session. There's some really good trading. For example, in my part of the world, 4 a.m. where I live is 1 p.m. Central Standard Time, and you can get some really good trading. I don't like trading the New York morning. It's just too fast for me. I prefer a slower mark, gives me more time to think. Generally, that is, sometimes I do jump in when it's fast. Even in the afternoon, the New York session in the afternoon can be a little fast at times. However, the Globex session that we're in right now is perfect. Okay, and so I generally trade 5 lots and I'm after $200. So that's sort of my target, and that suits me. So I promote to my members. I run both a live trading room and 3 mornings a week, and also run my coaching room, which you join as a member, and you can you'll be attending those sessions or watching the recordings. And as I teach my members, by starting off with realistic goals, what it does, it builds both confidence and competence. Okay, now this member now, I think he's now earning, his last email a few days ago was $200, $300 a day now per contract, because it helps you build discipline, confidence, competence, and a whole lot of other things. We'll talk more about that in a moment. Don't skip ahead, traders, because trading truly is 90% head stuff. Now a lot of traders don't want to hear this, and they wonder why they're struggling. Now today you'll see me trading on the Renko charts. I love tick charts as well, and I also like hard charts, which is a combination. I teach members how to set these up between Renko and Heikin-Ashi. But you can apply my strategies to any type of chart. Now today we'll get to the charts in a moment, because it's easy to show you a screenshot, but it's better, I want to walk through from the right hand side so I can explain to you exactly what I'm looking for. Now this was a loss, and this was a counter trend trade, which I say to all new traders: ban yourself from CT trading. It's a lot trickier, and you'll find that generally if you've got inertia 80% of the time, the market's going to continue. And for an example, you get it wrong here, you miss out on a great trend trade. We'll talk more about that when we get to the charts. But I've been day trading now for 28 years, and I love CT trading, but I also am very good at it, but I don't get it right all of the time. Now when it comes to trading, there are, I'm going to make this global statement. Look, there's no certainties in trading. There's only probabilities, and that's really what we're after. Now in this particular case, that was 8 trades on the 4 tick. You'll see this here. So this is a really good session for me. So well over $300 per contract in 20 minutes. Now, as I'm also going to say, I've been trading for a long time. However, the strategies that I teach you, every single one of these are patterns that you're looking for. Okay, and human beings, we're very, very good at picking patterns and identifying patterns. Very quickly, I just want to run through the true potential here to show you, if you approach this correctly, and there's only one way to approach this correctly, following the money management rules, sensibly, that is getting rich slowly rather than having a false expectation of getting rich quickly. I want to show you the real power here. Now, to trade the market I'm trading now I'm trading there. When we get to the chart, you'll see a 4 tick Renko. I might risk up to 16 ticks, which is $80 per contract. Now, to stay within our 2% money management rule, that means you need to have $4,000 per contract. You may not have that. In fact, I allow for more than that, because I only trade at a risk of 0.5 to 1%. 2% is great when you first start off, but over a longer term you want to lower your risk, because effectively you are your own hedge funds manager. Okay, and very few active funds managers are going to risk more than 1% in any individual trade. But anyway, back on this. So you might say to me, Ray, I've got 10,000, 20,000, and I would say, why not start on a micro contract, cut your teeth, make any mistakes you're going to make, then you can progress from there. But on the other hand, if you've only got a small account, here you can start off with $400, targeting only $20 a day. Now what that means, traders, is on the big contract you'd be targeting $200 a day. Now if you start off with 400, 12 weeks later you have the potential of having 4,000 in your account by only averaging $20 a day. And how this works, you only add and start trading an additional contract every time you have another $400. You double your money. This is an extremely realistic and conservative approach. You can always ratchet this up once you're consistently profitable. Now, is that realistic? Well, here you can see here this is on the micro NQ. You can see they're trading one contract, $63, $75, $88. Here we're talking $20 in a session. Okay, so it is realistic. Now what it ultimately means is, as I've mentioned, within 12 weeks you are now ready to roll over to the big contract. Now, by the way, you can download this Excel spreadsheet down below in the description link if you like a copy of this, and there's a training video, because there's certain inputs here you can put in and rules you've got to apply, otherwise you'll get ridiculous figures. And by the way, over here, can you trade 100 lots? Like here, if you're trading 100 lots on the NQ, that's a $10,000 a week income. Look where you are in a year's time. Yes, you could during the New York hours. Okay, you could be trading 10 lots. You may get some slippage, but you can realistically be trading and going for your $200 a day. But the reality is, most day traders are very happy earning between anywhere from $500 to $5,000 a day. Everyone's got different targets. Okay, so here, once we roll over, you're going for your $200 a day. You've got, within 12 weeks, you're up to your basically your $10,000 a week trading 10 contracts, and you've got basically a $50,000 trading account. This is the reality if you do it correctly. But once again, traders, and a lot of traders that watch my Google and look on YouTube, they want to do their own thing and they're not willing, and a lot of traders of course won't even become members, because I'm blunt and I'm direct and telling you how it is. But then they I won't even tell you some of the horror stories I get from members where they're just doing people that finally decide they see the light, let's start to do it correctly. But the challenge is, traders, the psychological damage it has done to a trader when they go and blow their account 2 or 3 times. Anyway, that's another story for another time. Now, based upon $20 a day rolling over, and remember, you can do this on the ES, on the NQ, on gold, on oil, on Forex. The exact same principle applies. Within 24 weeks, we've got a potential of a $10,000 a week income. That is the true potential. I'm going to show you how we do that. Now, before we get to the charts, let's get into some of the secrets. And when I say secrets, they're not really secrets at all. They've been around for years, and as Gann famously said, there's nothing new under the sun. But these are the fundamentals. As Coach Don Wooden used to say, you've got to practice the fundamentals every day. And the fundamentals are, for an example, we've got to check for red flag news every day. For an example, the second week after every 3 months after the quarter, you've got the earnings season comes out. So large companies will give the market reports before the market opens and after the market closes. And a lot of traders just don't realize why they're getting extra volatility. It's because of that. So the second week after the end of each quarter. Now that goes on for nearly 3 weeks. These are really important, annual daily red flags, because if you're caught in a trade when you get a red flag news announcement comes out, it can cost you dearly. But the great news is there's some great websites that we use which tells you a week in advance what's coming out, so we know when to make sure that we're flat, when don't have any open positions. But then we get to these things here, like pivots, your prior days open, high, low, and close, your major EMAs, and you will see what I mean by these when we get to the charts in a moment. Your intraday swing highs and lows and your current days open, high and low. There are indicators that'll plot all of these, and most of them are free. And you'll just be amazed at how we bounce off these levels. These are fundamentals to your trading. So let's go to the charts and let's start from there. So let me just minimize this. Now the first trade was somewhere along here, so this is a 4 tick. What I discovered was a combination of time frames. Now here I'm using a 4 tick and a 7 tick and a 12 tick, where I use an entry chart, an anchor chart 1 and an anchor chart 2. Now particularly the anchor chart 2, don't look, if this is losing you a little bit, once you see it explained over a couple of hours, it's really quite straightforward. But I've discovered a formula whereby we will get multiple EMA bounces at the same time on 3 time frames. Now you may think, why is that relevant? Well, let me just show you this here. Here we can see we're in a trading range. Okay, we've got, and by the way, here's the 200, so you can see we've got bounces. Now each one of these steps here, so I call these steps, is worth $10, by the way. So remember, to net $200 plus a day, if you net 200 a day on a 4,000 account, that's a 5% return per day. Let's forget the dollars for a moment and think about this. All I need is, after commissions and in losses, is 20 of these a day. I just need 20 steps a day to hit my target. Now in days gone by, when I get a breakdown like this, yes, I would trade the breakdown, but then I had no idea of how powerful this is. You could trade this one setup for the rest of your life and just live very, very comfortably. So this is the entry chart. We have a break below the 200, and look what's happening on my anchor chart 1 on the right there. I'm bouncing off for 200. That's that black line there. So I've discovered this, and I'm very hesitant when I say discovered. I just found this time frame just through experience. So probably about 10 years ago, of this combination of time frames, no matter what time frame. For an example, I do have to say this before the skeptics look at this and say, oh, this won't work in the New York morning. Of course it won't. This is a 4 tick Renko. You're going to have to be trading a 12 tick Renko probably. Okay, so there's different time frames that we use for different times of day. Now the other thing I want to say very quickly is, traders, don't try to find why the reasons the trades don't work. I want you to look at these and look at the logic why they do work. Okay, so here we get a bounce. Okay, now I'm not going to enter this trade until the anchor chart 1 candle closes. Okay, but look at that there. Okay, that's a $100 move. Okay, in that one move. So this is a mechanical, rules-based, pattern-based setup that we see every day. Now I'll only flash up this once. Now in my members area, and this is where some traders that are new say there's so many things in the members area, I'm lost. Well, watch the training videos, the introduction videos. But what I wanted to show you was that in the strategy PowerPoints folder, traders, I've got like 35 PowerPoints, but for each of my key setups I've got a PowerPoint there for it, and for most of them there's really comprehensive training videos there. And by the way, some of my members have even put together, this is a member put that one together, that one there, France, put there the Big Dipper. He calls one of my setups, and really comprehensive PowerPoints. So once again, you start off just with some basic setups that I teach you. And what I don't want to say, when I say basic, some core trend following strategies. But once again, there's so much I want to teach you on digressing. Let's get down to looking for some trades. I want to show you exactly what I'm looking for here. Now what I've done is expanded my chart, and on other charts, on other screens, I then would normally have my anchor chart set up. So as we're coming up here, I'm now getting a retracement. I've got a new higher high. As I pull back, I'm looking for a bounce off my major EMAs. In fact, members that are watching this know we call this a 3B. With any trade we take, and so this is already labeled from when I was trading, with any trade we take, we say to ourselves, what's in front of the trade? Do I have blue skies ahead? For an example, over here, if you're selling here, you're selling down into a major EMA, expect the bounce. You sell here, expect the bounce, expect the bounce. Now eventually you'll roll over, and we identify those when we start making lower lows and lower highs. So here I've made a new higher high, new higher low. What's in front of me? The current day's high. Now as we come up to these levels, quite often we will punch through those levels, but other times we bounce. What I prefer to do is what I call front run. Now here I've gone long 5 contracts. Front running is where we may get out a couple of ticks beforehand. That works for me. I'm a scalper, in and out. I want to get the cash register ringing. The quicker the better. That's my philosophy, and that's why I'm usually wrapped up with my trading well under an hour. But that suits me. If you want to go for a slower or start trailing, you might increase your time frame. The only reason why these strategies will not work is the time frame that you're trading, particularly if it's too fast where you can't manage a trade. But anyway, up we go. So I front run that, and it's hard for you to see there, but I got out right there 2 ticks below the high of day. Now this punches through, and we can say, well, look at all that you missed out on. Well, not really. I've left something in the middle for the other guy. I'll now look for the next trade. Now this is a trade, a divergence trade here. I call it 2D. I got stopped out of this one immediately. Now reversal trades work really well when they're off pivots, major EMAs, open, high, low, and close. There are certain levels where divergence trades work really well, and with this particular one it wasn't to be, and I was stopped out of it basically immediately. Now you'll hear me say to all new traders, do not trade divergence initially. I'm good at it because I've been doing it for a long time, but it's like with a normal trend trade, you're not going to get them all. For divergence, what I found with newer traders, if you're looking for divergence trades, it's almost like it's very easy to become hypnotized on them and then miss out on these. Okay, so here it was a beautiful trend trade that I then missed out on that. Well, you may say, for experienced traders, why not stop and reverse? Well, by the time I get stopped on this trade, okay, it's already well and truly underway. And on the other hand, I don't want to get in when it looks like it's going to reverse, get in here, because quite often it will trend back down again. So my attitude is, if I'm in a trade, I'll stay in it unless I've got what I call a time-based stop. You know, in real estate, you know where they say location, location, location. In our business, as day traders and scalpers, we say momentum, momentum, momentum. So if the market is really slowed down, that's where you then may choose to cover your trade, exit the trade. I call it, and sometimes you'll be out at a loss, but it's better a small loss than a large loss. I call that, by the way, taking a haircut. Okay, as we now continued up here, I then had another 2D setup. It was even better than this one here. It was off the high of day. Now in this particular case, I got out at break even. And the reason I got out of this trade at break even is once I hit what I call 5 steps on my dome, it automatically takes me to break even. Okay, and it just covers basically the commission. I go to break even plus 3 ticks. And so there it went down and it bounced and I was out at break even. That's trading. I then had for members watching this virtually, and actually I was going to say here virtually it's a T10, but it was a T10, which is a change in trend, or a directional change in trend setup, which just kicks butt. It does really well on the anchor chart 1. So on the anchor chart 1 it was very obvious, so I jumped in on that particular trade. Now see this here. So I've got a major EMA here, major EMA here. Remember earlier I said, do we have blue skies ahead? So when you're selling with the trend, usually you've got what we call blue skies. Here we're selling straight down into major EMAs. This is a 200. Why is that important? Because we nearly always, bang, there it is, we'll get a bounce, and I call that a 3B. Okay, so up we go. I entered this trade. I was in that a little bit late. Up we went, and I got out of that one, got 5, and where it says I was stopped, reason I was stopped out of that trade, that was, it went to break even, locked a few ticks in. Okay, so it didn't give me a great return, but that's the way it is. Okay, I then had another T10. So that was a nice T10. I then had another T10 on the anchor chart that I missed that one, and that would have been a beautiful trade. Now then I came down, and just to show you this here, let me show you this video for a moment. Okay, I just want to show you that, and just so let me just click go. So here, this is the first. I've just rallied ahead a little bit. Oops, let me go back. Let me just go back here a little bit so you can just see how I execute the trades here. Won't show you the whole thing, but here I've gone long here on this particular setup. What you couldn't see, I've then pulled it down and got out at break even. Now what I didn't realize at this stage, this is a T10 on the anchor chart. I'd failed to look at the anchor chart. Now if we sold here, we'd be looking at covering the trade, or at least making sure you've locked profit in when you come back down to the 200. Okay, so this hopefully doesn't take too long to tick down, but it's good for you to watch this because this is what you want. Okay, you want the true fast track to day trading. So you'll just find here, regular as clockwork, you'll bounce off your major EMAs. So once I bounce off it, and I then and I'd realized then I'd missed out on the T10, it was all over. I'm then looking for another trend trade. Now this is where it's also getting a little challenging, and the reason being, if I was to drop in a channel here, you can see I'm making lower lows and I'm making lower highs. So we've got to be very much aware of that. So by looking at the anchor chart, so here I'm ready to go long again. So using the dome, I've got a rule that tells me when to get in this stop. If we've got time, see whether I adjust it. Oh, it rallied up straight away, went to break even very quickly, as you can see. Now just here, see how I then brought my stop loss up. Why? I had a pivot right there. Remember on that slide I showed you the pivots, open, high, low, and close, etc. You've got to be very aware of. That's why, because quite often you will bounce off them. So what you can actually do, like we may be hoping we're going to rally back up to the high of day traders, but what I want to do, because my entry was here, I want to then get my stop, lock some profit in, just in case of this, in case I get a reversal. So some traders will say, why don't you always trail? Here this took off fairly quickly, so oh no, that was the one we're just talking about. Is I prefer to get in, get out, because in the end you only need 4 or 5 net scalps a day and you've got a mighty good living. I think I've got another setting up here in a moment, so let me just perhaps move that along for you, and let's just see what happens. What have I got here? I'm pretty certain I had another setup. So I'm just looking here at the channel, and that's just typical. Look, I'll see the bounce once again. Now I'll put in channels and things like that more out of interest, and they do make great targets, but once again I prefer to scalp. So, and just so you know, doesn't matter the time frame I'm trading, I'm after what I call 7 steps. Now this is $70 per contract on this particular time frame. Okay, now here I've gone short. I've got this is a T20-1, so this is another setup. Now this is a higher risk trade. Why? Because I just sold right on the 200 EMA. So here I'll adjust my stop loss slightly. Now this is very definite T20-1 traders. I'll usually then pull my stop down so I'm just above the swing, and you can see down here I've got a target. I think I may have even got out here fairly early, so I'm locking some profits in. And the reason I'm locking profits in here, when you break a 200 EMA, you'll quite often find you'll then go back up there and retest it. So I'm locking some profits in. Very easy to be adjusting your target as you trade. What happened there? I must have got out. And here I've got a buy. I'm not sure what happened there, but anyway, I'm out of that trade. Now I've got another one. Now this is called a 2B, by the way. So I want you to notice down below here, what have I got? Just see that black line? That's my anchor chart, the major EMA on the anchor chart 1. Now why is that important? Because that makes an ideal target. Now I really like to put my stops, by the way, 1 tick above the swing, 1 tick below. Now I hit 5 steps. That's why it went to break even. Now what I will quite often do, if I'm in a really high probability trade, which this one is, I'll sometimes even lift my stop back up to 1 tick above the swing. And the reason for that, excuse me one moment. So traders, I just coughed then and I paused the video and I rambled, kept talking, and went to the end of the video and finished. Okay, let's finish up now. Thanks for attending. And I just realized I hadn't hit record again. So this is one where I'll have to play it back and work out where on earth I actually paused. I can't remember. So I'm going to go back to what I was saying a couple of minutes ago. And so if there's a bit of a glitch or a glitch in the video, that's why. So just here we come down, we get a bounce. Now I think I might have mentioned this, that whenever we take a trade up to a major support resistance level, I'm ready to exit. Okay, I'll either get to break even or lock profits in. If it keeps going, fantastic. If it does this, comes back and stops me out, so be it. I'm just going to go along a little bit here because now I'm back with trading definitely in the direction of a trend. See how we're now making lower lows and lower highs? Okay, so for members watching this is a 2B short, and we've got major support resistance down the bottom here, and I really can't remember how far I got before I coughed and paused this video. But you've heard me talk about front running. we can see the major support level down here. I will get out usually a couple of ticks in front, and you'll see a lot of us quite often we will bounce at that level because other professional traders have got exactly the same thought pattern as well. And then we're about to hit that. Here we can see I've tagged I haven't been filled here. I've actually hit my to cover the trade, but and this is a good thing if you're a brand new trader. And now we're filled. Just because it hits your price does not mean you're filled. I want you to remember that you're in a lineup with other traders, and I think this is just to show you. Then pricing collapsed down to the next pivot. I have a setup I call the T28. Well, actually I call it the pivot magnet trade. One of my members, Ali, came up with this because I love my T's. Okay, trade 20, trade 10, 3Bs, but love my T's. He calls it the T28, and it's we've got extensive PowerPoint on it and training, but it's selling and buying into pivots and major support areas. It's a very high probability setup, and you can apply it to any market, any time frame as well. So down we go. And I don't think I mentioned this is what we call the cloud. So if you've got the cloud here, you want to be trading, especially new traders. Is the trade in the direction of the cloud? Okay, if not, no trade. Okay, and what that will do is keep you on the right side of the market until you really get to understand how divergence works. For an example, just here we're bouncing off yesterday's open. Remember, in the PowerPoint, that's one of the things that we look at. Okay, so where is the prior day's open, high, low, and close? Where's today's open, high, low, and close? And where are our swings? Why all of these end up as price magnets? So traders, come and join me for $197. You get all of my indicators. Even if I don't have indicators for your platform, I give you all of the indicator settings so you can set them up just using my custom setting on basically any trading platform. And of course, you can attend my coaching. Now if you go and visit my website, well, I'll just put in, just so you know, if you visit, it is $297 on my website, and the coaching is $297 a month on the website. If you decide to continue, that is, when you first join, you're not signing up for the coaching as well. And by the way, you're not going to have any telemarketers ring you. Okay, there's just myself and a couple of support staff. So I'm it, which means you've got to drop me an email if you'd like to continue. But if you do go to the website, it's $297 a month, so you can save a fair amount of money. Traders, that's it. I'll see you on the next video, and look forward to having you as a member. Thank you, traders.